On set with me is a mortgage expert, someone that has been in the mortgaging industry for years. If you have your home on mortgage, I am sure you have dealt with him before. If you have walked into a bank to get a mortgage, I'm sure you have dealt with him before. He's been in that industry for as long as I can remember. For as long as I've been on the property show, I think I have seen this gentleman in the mortgage industry, in the banking, in the financing sectors. Did I introduce Michael and Milnam, your financing solution advisor, and that one person you need to have a conversation with before you think about mortgaging, home financing, or home solutions when it comes to finances. Michael, it's a pleasure having you on set.
Pleasure is always mine. Thank you so much.
You know, Ugandans have had the wrong mindset about mortgages. Ugandans have had confused mindsets about mortgages. So today I want us to go down a little bit into detail. So we'll start with the basics. What is a mortgage, Mike?
So when most people ask what a mortgage is, we are always inclined towards going into the legalese of what a mortgage is. But I'll just keep it simple.
Please.
A mortgage is that financial instrument or a tool that a financial institution will give to an individual to acquire a property. So that essentially means that if Christabel is looking at acquiring a property or owns a property, the bank will come in and give you money. And to cement their interest, or to actually show that they've given you the money, they will register an instrument called a mortgage that they put on the title. So a mortgage is that interest that the bank puts when they actually have given you money. But simply put, it can be a loan that the bank has given you to either acquire a house, buy land, or it could even be that amount of money they give you to either develop property, but as long as they have registered a mortgage. So it takes two forms. It could be residential, where you're actually acquiring property for residential purposes, or it could even be commercial, where you're putting up, a block of apartments or like a building block of arcades, to mention but a few. But look at it as a financial instrument that the bank gives you to address a particular need.
When we come to you as the forefront of banking finance institutions, there's a way you sugarcoat the mortgage. There's a way you smear it and make it up and give it filters. I want the honest, naked truth about the process of a mortgage.
Because rarely will you get a person that has had the experience of being on the supply side of mortgages, because I've given up mortgages. I also been on the demand side of mortgages. I have taken mortgages. But also more importantly, I have seen the good side of a mortgage. I've seen the bad side of a mortgage. I've seen the ugly part of a mortgage.
Now that is what I'm looking at. So let's first go through the process.
One, it's always important to know that banks across the country are not charity organizations.
True.
Okay? They're in the business of offering what you call financial intermediation, where they will get money from Christabel, who has it, and will save it on a particular account, and they'll give a decent interest, and they'll give it to Michael, who wants it to partake a use, and then Michael will pay them interest.
A double interest that they're giving
no,
you.
No, it's not. Let's first wait to go there. Or they could have a shareholder who's invested money in the bank and expects a decent return. And banks always want to actually have what we call a decent return, especially on what they call banking activity. Now, banking activities are people desirous of acquiring some properties, and can we give some loans? So that means if the consumer knows that at the back of their mind, this is not free money. And if I'm to ask you a question, Christabel, if I came and asked you and said, give me 10 million shillings just because I smile well, just because I look good, would you give it to me?
Hell no.
You know what that means? That means you actually have to first look at three things. Five things. One, who is the character of the person that I'm lending to? Will Michael pay back my 10 million shillings? Two, under what conditions am I giving Michael this money? Will he pay me back interest? When will he pay me back my interest? When will he pay back this loan? Okay? Does he have the ability
to pay
it back? That's the capacity. But more importantly also, what is he taking? Should he fail to pay?
What am I holding?
What are you holding against him? And what is also very critical, let's look at his character. The people that he's gotten money from, has he paid in time? So simply put, that's what the bank's process is going to entail. It's going to look at the criteria upon which they can actually say, is this individual bankable? So now most of us, unfortunately, think that when we get this money, that it's been freely given to us. Not exactly. So we're not fit and proper, not ready to take this money. So it's very important that you actually ask yourself as a consumer, I want to acquire a property. Let's say a property at 100 million shillings. And for me to pay it over a period of 10 years, I'll be paying a monthly installment of, say, 1.5 million shillings. But for me to comfortably pay that money, I should be earning around 4 million shillings or 3.5 million shillings. Hey, do I earn that amount of money? Will my employer be willing, okay, to give me an undertaking that, you know, when you get this money, at least for the time you get it, if you're employed with us, we shall always be remitting that salary into that bank where you're paid, okay? Am I actually bankable in the sense that when they give me this money, I will prioritize paying the bank? And if at all I get this money, am I putting it to the right use? I said I'm going to buy a house, so they've given me this money. And once in a while, someone passes and says, "Buy, there's this nice Prado to buy." Am I going to change goalposts? So the process is to see to it that you are indeed are the right customer that they can give the money to. So in a nutshell,
I like the way you've put it.
That is the process.
Totally, the way you put it is more actually understandable. It's more digestible.
Yes.
So, Michael, what are the benefits of this mortgage? I want us to look at the Ugandan setting because the Western world has a lot of advantages as opposed to the disadvantages to their mortgages. In the Western world, it is more actually feasible and sustainable to get a mortgage as opposed to getting out cash from your pocket to construct. What is our advantage here in Uganda to get a mortgage?
First, it's important to get to know that if we are restricting the mortgage to being a financial instrument that you're going to get to acquire home ownership, I think it's a more focused discussion. So let's look at it. Let's say Christabel actually has always wanted to own a property, has always wanted to own a home, or has always wanted to own that investment property that can power their financial freedom.
Yes.
How is the mortgage going to help them? Let's first also understand this, that in Uganda, our savings culture is not that high. Ideally, if Christabel had the 100 million shillings to go and buy a property and she saved it, she would go get that money from the bank and just pay outrightly cash. And some people do it. But let's say Christabel doesn't have this money. And the property goes for 100 million shillings. But all she's done, she has 20 million shillings. So in this case, what the mortgage would help her is come up with the difference, which is 80 million shillings that she has not yet saved. So it unlocks the opportunity for you to actually acquire financing in the absence of a saving. That's the first. The second is in, let's say Christabel were renting. So instead of paying a landlord money, Christabel now can now pay the bank, and the bank in this case, whatever payment she is making, there's a portion that goes towards home ownership. And then the third thing, that Uganda is actually blessed because when you look at our market, it's an emerging mortgage market. It's not yet even mature. So when you look at
totally virgin.
Yeah. So when you look at the population of Uganda, I mean, around 46 million people. Our land size is around 200,000 square kilometers. If you just remove the land, 36,000 square kilometers.
What can we do? Just roughly in a few words while we close. What can we do about this? Because it still gives me a throbbing headache.
Okay, we're Uganda and there are many parts at play and how your interest rate is arrived on. What you can do as a consumer, have a good character. So that when you actually go to the bank and they look at your ability to pay, they'll say this person is a class A. Class A, they rate this person here can pay. Because these mortgage interest rates also to the bank, there are many factors. That's what the central bank rates, the costs of capital that the banks are using. And please note, also these banks are typically using, in most cases, depositors' money.
People's money.
True. So yes, they'll give you a loan for 10 years, but Christabel, if you put your money on a savings account and you want a deal like tomorrow, the bank is going to give it to you. There are things that the government has to do, like infrastructure development, strengthening our financial systems. You, the consumer, need to be bankable. The banks also need to see what they can do. So it's many parts at play. So for now, take advantage of the capital appreciation rates of your property. See if you can afford this interest rate, even if it's double digit, and wait until that day when
so
we shall talk
basically our double
digits.
digit interest rate is not about to change.
Not in the near future. If we do not, if it's possible, but there have to be many moving parts that come to play. Yeah.
Let me just say thank you so much. What are your parting words? And I'm going to make sure, Michael, we see to it that we have you on set again to understand this thing called mortgages better, because someone out there wants, every Ugandan I'm sure wants to be a homeowner, but we all know how financing a home is not easy, and mortgages are our next best thing as opposed to soft loans.
Okay.
So what are your parting words?
Just two things. One, it is possible for everyone to be a homeowner, but it's better you plan your journey to home ownership. While mortgages are good, they are just simply a tool. The rich rule over the poor. The borrower is a slave to the lender. Proverbs 22:7. This is what I mean. It is okay for you to own the home with the right financing, but with the wrong financing, the home will end up owning you. How I pray that you own the home and the home
Not
doesn't
that the
own
home
you.
doesn't own you.
Thank you so
Don't
much.
we all pray for that? It was a pleasure having you on set,
Always a
Michael.
pleasure. Always a
Thank
pleasure.
you.